Good morning, everybody, and welcome. I'm Rebecca Harris with SBA Funding. Our parent company is Business Funding Group, and I'm joined by my colleague, Dan DiMauro.
Hello, everyone.
We are here today to talk to you about the SBA Justice Loan Program, something that we're super excited about, giving you information today to help you make better decisions and more informed decisions about what your options are for your law practice going forward. So in partnership with the Michigan Association for Justice, we're happy to present this webinar today. Please do feel free to ask questions, pop them right into the Q&A, and we'll leave some time at the end. Also, forgive my voice. I'm sorry, but I'm just getting over a sickness, and I know it's unpleasant, but we will grin and bear it and get through it together. So thank you for your time today. Thank you for being here. And with that, let's kick it off. Okay. So we'll just do a brief interaction, and then ultimately we're going to talk to you today about building a strategy to really manage your practice through a period of persistent disruption, which it seems we are not getting out of anytime soon. So let's plan ahead and how you can use SBA to grow your practice. So introductions. Our parent company is Business Funding Group, as I mentioned before. SBA Funding is one of our DBAs. So in Business Funding Group, we do offer other loan products and specialties, which we can discuss a little later or offline. Through SBA Funding, our sole focus is bringing SBA loans to the hands of all business owners. But in this brand, we really focus on attorneys, which is our largest industry that we serve. I'm Rebecca Harris again, CMO, and Jared Preston. I don't know if any of you know him, but he runs our legal lending division. He's the CEO of the company. He's not here today. He's thankfully taking a long trip to Europe, which is so long overdue and well-deserved, but he is available to anyone, anytime. If any of you know him, he has been friends of MAJ for many, many years. And then Dan DiMauro again. All right, so we were founded in 2011. We are one of the largest providers of SBA loans to law firms in the country. We've done well over $1 billion in SBA loans specifically, and equal to that and not more in non-SBA loans as well. We have a consistent, management team that's been around for a long time and comes with a really diverse set of backgrounds that brings together a really experienced bench, let's say, for us to build our practice from. So managing through persistent disruption. So I don't need to tell anybody on this webinar but new case intakes are down. Obviously, that causes uneven cash flows. Court closures are a major problem. Have had an outsized impact on your ability to have those consistent cash flows. And obviously that's going to pose a clear and present challenge over the long term now, as we coming out of COVID and then also facing down a potential recession and a high inflationary environment. So what can we do ahead of time so we can build up case inventory, and this is just something we always like to convey to our clients in the legal industry, is to just never ensure that your case inventory is never used as a cash management tool. There are other options available to you for that. So investing in technologies is another way that you could help build efficiencies into your practice. This is just a differentiator. There are just so many things that you can do when you're thinking about your practice, how it's managed, how it's run, what's your average time for case settlement. There's just so many things to think about that technologies can help you measure to just build as much efficiency as you can into your practice to weather any storm. So on that note, the mantra of our finance work. So Steve Urbanovich is our chairman. I would have loved to have him join this call, but he is, I would say, our sort of sensei, our guru. And he likes to say this as much as he can, because ultimately it always comes back down to this mantra: borrow money when you do not need it. When you do need it, it's either too expensive or it's not accessible to you. This is fundamentally true, and we see this with law practices all the time. When there are very uneven cash flows, a law practice will think, when they see a dip in the cash in the intakes, when they see a lull in revenues, then they think, hey, let me go and let me borrow and shore up, because I know next year is going to be better. I can see my pipeline coming down. I can see my case intakes picking up. But I need to, weather this gap in time where I have, insecurity about how I can manage my practice with ease and with comfort and focus on it when I have this other issue. The time to borrow is when you don't need it. You don't want your financials or your interim financials to show any sort of loss, right, or weakness. You want to borrow when it's strong. And Dan and I can talk to you about why that's so important for so many reasons. One of which is if your financials are showing some weakness, we can still do something, but it's going to take you. We have to catch you at the exact right inflection point. So if you're borrowing when your financials are still really strong, then you can, even when if you don't necessarily even need the money, it's an insurance policy. There are no prepayment penalties for SBA. You can certainly borrow as a reserve, as an insurance policy, as something to help you have peace of mind so that you can focus on the management of your practice and serving your clients, other than thinking about, uneven cash flows. And then you can pay back the loan if you decide you don't need it. There are a lot of flexibilities, and those are the things that we can help talk through. So ultimately, walk away from this webinar, if nothing else, with this message, just to think ahead. It's super important to plan. So we'll talk to you about how to use SBA to protect your business, grow your business, and to build long-term equity. It really is and can be a powerful tool if you know how to deploy it to protect your business and to weather any storm. So the paradigm with law firms, you know very well, because of laws governing who can own a law practice. Although of course we know that's changing, in Arizona and DC are certainly paving the way. There's so many unknowns with that, but right now there are no real public market options for attorneys, and banks don't really understand contingent assets. Typically, we do work with a network of banks that we've really honed a relationship with over the last few years to just ensure they do understand contingent assets in a different way than most banks do. But this is probably a hurdle that many of you have faced in the past. Conventional loans are really hard during economic times. Right now, as inflation becomes high, banks are going to start pulling back. They could potentially pull credit lines. Like they are starting to think about risk and their balance sheets in a different way than they were 1 year ago. Of course, it's harder to project future revenue and profits in continued period of disruption. And most conventional loans demand large interest rates and come with a lot of covenants. This is kind of what we were just saying as well. Banks are reluctant to do conventional loans with uncertainty. SBA does offer a solution to that. Banks dramatically increase credit criteria. SBA does not. The entire goal of SBA, of the U.S. Small Business Administration, is really to spur economic growth among small businesses, of which 95% of the businesses in this country are. So there's no additional tightening of the credit criteria for an SBA loan, which is key in an environment like this. And bank loans which have many covenants, the SBA has only one: failure to repay. That's it. There are no other covenants. Nothing can happen that will, put your SBA loan in jeopardy. So it's stable, secure money from the federal government. Okay, so again, just to really belabor that point, banks will only finance stellar performers. So the top echelon, they're going to be extra careful when they're putting out their lending criteria, especially in times like this. And they can impose a lot of conditions and cancel existing loans. In fact, I think, Dan, you could speak to it later if you want, but you were working with a borrower recently who, or I'm not sure if it was you, Dan, I'm sorry, who came to us very organized, is moving very fast on an SBA loan now because he just got word that his bank is going to call his line of credit. And so he is very organized, and we're going to get him the cash that he needs to bring him the financial stability that he can't really operate without. Okay, so we've been building towards it. We already know why we're here. SBA loans do present a great solution to all of those problems that we've set up. It is a stable, government-backed, long-term loan that's going to help you protect, grow, and build equity in your business. Plan ahead, think ahead. Okay, so who qualifies for an SBA loan? Our team, actually, if you express any interest in the loan, or you just want to chat it out, we have a no pressure environment here at all. But this is ultimately what we're doing. We can very quickly identify who's eligible and who's not in a brief phone call if you have all of your numbers and your history together. All that said, it's basic, right? Any bank would look for this, right? Credit score. So there is a minimum credit score, your credit history, and certain events. So the one thing that would be a deal killer for us would be, have you ever defaulted on a government loan before? If not, then you should be fine. So of course, the bank is going to look at your ability to repay. They want to see that your cash flow is there and it's present. Our team is adept at qualifying you from a free cash flow perspective. Ultimately, the bank cares about whether or not you can pay back the loan. Is there sufficient cash left over after you're paying all of your expenses to be able to pay back that loan? That's what they care about. That's what we're going to help identify very quickly so that we can tell you and offer you counsel on how to best position yourself, whether or not it's now or it's next year, if you're planning your tax returns for 2022. What do you need to show? How much cash flow needs to be there to be eligible to borrow what you need to service your particular mission to grow your practice? And then, of course, the law practice is eligible where there are some exceptions. Okay, so you can borrow through our program from $150,000 up to $14 million. These are working capital loans, super, super flexible. We'll go through the use of proceeds in the next slide. But they are 2.25% above prime. I'm so sorry, my voice is going out. And they are 10-year working capital loans, 25-year real estate loans. There's a lot that we could do to move it around. It really depends on what you're looking for, what you need to grow your practice, and what you're eligible for. No prepayment penalties. Super important to point that out because that's what we were saying before. You need to shore up, right? Cash is king, cash is king, cash is king, thinking ahead, planning ahead. You want to shore up, you just want an insurance policy. You see a dip on the horizon, your financials are still strong. Get in, take what you can pay it back. You will not pay a prepayment penalty on that working capital loan. And they can only be canceled for non-payment. So no covenants. Again, stable, secure capital.
Rebecca, can I just interject quickly on
the
interest rate? I just want to clear something up. So Rebecca is really talking about the flagship 7A program. There's really two components to it. One, the working capital, and one, real estate. So just want to mention that the working capital loan is 2.75 plus prime. And if you're interested in purchasing real estate and using that loan, it would be 2.25 plus prime. Just want to clarify that quickly.
Thank you, Dan. You also gave me a chance to rest my voice and drink water. I appreciate it. Okay, so we're going to talk about protecting, growing, and building, and we're coming to a close here soon. Okay, so this is that, growth. How do I use SBA to grow my law practice? Internal growth, advertising, acquisitions, which I'm going to talk a little bit more about books of business, investing in technology and infrastructure, hiring new attorneys, because you do have those case intakes are on the rise and you just need the help to be able to process it, and acquiring, again, competitors or related businesses, which is kind of twofold in here. But, we are in a moment in our country where a vast majority of baby boomers who own law practices are either retiring soon or getting ready to. This is a huge opportunity for growth. Another thing, we're thinking about preparing for a period of extended disruption. While economic turmoil can be really challenging, it is also for practices that are ready, for practices that are prepared and that are strong going into an environment like this. It could present meaningful opportunities for growth as well. So if there's a baby boomer that's retiring and they have a specific book of business, if they have great goodwill in Michigan, say for so many reasons, there could be a firm that you could identify that you would want to purchase to grow your practice. Even if that means, hey, I'm going to purchase a law practice that's successful, that's doing well. I'm going to use an SBA loan to do it. And then I'm doing that on a plan for my own exit strategy, which is going to be in 5 to 10 years from now. But this is all part of my strategic path to grow my practice, to be able to achieve the valuation that I'm looking for to sell my own practice. Certainly it is an option to buy another law practice on that path to achieving that ideal, that goal valuation of yours. SBA is a perfect loan to be able to do something like that as well, if you're well positioned. Okay, again, we do, I think, Dan, you probably could speak to this too. You're talking to a lot of law firms. A lot of them are using working capital loans to just staff up. A great time right now, we're in a really strange transition, but when economic times are difficult, there are a lot of, talent pool grows. It's sort of strange. Again, we're at an inflection point right now because, employment rates are still very strong. But that said, using working capital to hire and to staff up your practice is certainly a good and great use of common and great use of loan proceeds. Okay, so this is something that we love talking to lawyers about because they often don't know that SBA can be used for real estate. You've heard the mantra before: real estate, location. Wherever you're buying, Michigan market I know is very strong, as it is in Connecticut and so many other places here on the East Coast that we service. That said, SBA is an incredible loan, especially for really eligible borrowers. Really qualified borrowers can potentially borrow 100% of the purchase price of a building. There are a couple caveats to that. Your practice would have to occupy 50% or more. So you could build a revenue stream here for your practice. You could buy a space, a commercial space that's larger than what you need, and then have that additional space as a revenue stream rental for rental income. The property itself acts as the built-in collateral, which is great, and super qualified borrowers can even walk away with additional working capital on top of the building purchase price. It sounds too good to be true. It's not. It's really a magical thing. We love telling people about it because rent goes nowhere and ownership builds long-term equity. This is a way. This real estate is a singular way to build long-term wealth. And so it's a wonderful thing that lawyers often don't think about. Maybe they don't even think about it early enough in their growth. But it's definitely something that you should be considering now, especially as commercial banks tighten, right? And commercial real estate loans become a little bit more difficult to get and very expensive and filled with covenants. And they're also going to ask you, by the way, for 30% down. Dan, did you want to add something?
Yeah, I was going to mention the 30% and just also that, with equity comes, think about some of the things you don't have to do if you're an owner as opposed to someone that rents. You don't have to worry about signing a new contract and meeting those deadlines and worrying about where your growth will be in 5 to 10 years. Cement yourself in a place that you'll grow exponentially.
Absolutely, as well said. Okay, so again, our guru, Steve Rabinovici, prior proper planning prevents poor performance. This is one of those things. Cash on hand, have cash as king in all aspects of managing your practice. To think about what's coming and to think about how to get yourself ready is, of course, something that if you had all the time in the world, I'm sure you would love to do. But you're managing a law practice. You're helping your clients. You're doing all of those other things. We know it's not always easy. We want to act as a guide for you and an advocate to help you get ahead of any turbulence. To keep cash on hand, to keep a reserve. So again, Steve Rabinovici says 6 months cash reserve to cover all of your expenses is a no-brainer at any time for any business. 12 months in a period of economic uncertainty. It's going to help you sleep at night. Cash is king, have it on hand, borrow when you don't need it, or at least consider your options, because you can pay it back. There is no prepayment penalty, and it's going to give you peace of mind. And then if you're well positioned and you're feeling really strong, it's going to give you the ability to seize opportunities as they present themselves. Again, borrow before those financials soften. No other way to really say that, I think. Dan, you have anything to add to that?
All set.
Awesome. Well, that wraps us up today. So thank you so much for all of your time and your attention. You will receive an email from us shortly. We want to thank you again for your time and offer up our time to you whenever it's convenient. We'll do one-on-one meetings with you, just pick our brains, ask any detailed questions. I don't see any questions through in the Q&A Dan now. I don't know if you want to look at that as well, but you can reach Dan directly on the information here. And you can reach me as well at rebecca@businessfundinggroup.com, all 3 words spelled out. But we'll send you an email and we'll give you our contact information. We're a resource for you, just again, for any questions that you might have, any scenarios you want to run past us. Pick our brains. We're here to help. We thank you for your work and your time.